Okay, good morning, everybody, and happy Wednesday. We've got a pretty big day today, or a big 24 hours in terms of data that we have to parse through tomorrow, and of course, we get the Nvidia earnings today, which whether we like to admit it or not, are going to be very important for the market and for the indices. So, I would say let's get started here in just a moment. I want to make sure that everyone has a chance to log in though. So I want to make sure maybe we give it another minute or so, and then we're going to get started here. A couple updates before we get started, and for those of you guys that are here early or on time, probably, we are working on building out a lot more stuff here on YouTube. So super exciting. In fact, I think there's a ton of stuff here on YouTube that we can use in terms of the platform to basically distribute our research, to build that community. Quite frankly, better than in sort of some of the membership areas that we built on our own. So I'm just letting you guys know there's a lot of stuff that we're working on behind the scenes, and I think it's going to be very, very helpful for all of you to be able to follow along on the research ideas, and of course to build the community more and more. So that's kind of an update on that. So again, good morning, everybody, and thank you everyone for being here. If this is your first time here, please make sure that you hit the subscribe button, and that you always, and this goes for everyone, please always give us a thumbs up, like in the videos. That allows us to be able to continue to grow the show. If you have feedback on the show, by the way, and we've been doing this show now for, I think, a year and a half. It's been quite a while. We would love to hear it, right? So please let us know. The best thing to do would be just for you to email our team. It's support@thesteadytrader.com. I think if you leave the feedback here in the chat, it might get lost. But if you could send an email to support@thesteadytrader.com, that would be awesome. So thank you all for being here. See a lot of the usual names, some new ones here as well. So let's get started. So again, today obviously we have an important day for the market as far as market cap concentration is concerned, and that is Nvidia. I do want to just quickly, before we get started, give you a bit of a lay of the land of what we're going to talk about here today in the next sort of 10 to 15 minutes. I do want to show you, we're going to build together a chart. And I should mention this too. Like, I think a lot of people like to look at charts, but they don't know how to build charts. Yeah, I'm going to keep it at that. And so that's one of the things I'd like to maybe do a special session on at some point. If that's something you guys would like to hear about, let us know. So we're going to build a chart together today. I think it'll be very compelling, and it'll be sort of a sneak peek of maybe a special session we could do one time. So if you guys would like that, please just tell us, chart day, and then we'll spend half an hour on that. Type in chart day or something like that. That could be fun for us to know, if that's interesting. But we're going to talk about the S&P. We're going to go through some energy stocks. We'll talk about Nvidia, and then we're going to build this chart together. So here is where we're at. Let me just quickly change the ticker here because that is confusing. That's not meant to be Pepsi, although we did look at Pepsi today. If you are a momentum TST China momentum indicator user, you will receive an alert on Pepsi today in your inbox. So this is just a quick reminder. If you've been here for a while, you know we like to start the day with this chart, and this is just a reminder of the year-to-date performance of things. So basically, gold miners, silver, platinum, copper miners, palladium, all those things continue to lead the tape year to date. What is lagging the most is Ethereum, down 8% on the year. Bitcoin is down on the year. The Russell 2000 is up 6%. The S&P is up 13.6%. They're up, but they are lagging, right? So we've talked about this all year. Actually, Bitcoin and Ethereum were doing quite well, and then they completely nosedived. So from a performance perspective, we're starting to see things change a little bit, and I think that's important, noteworthy. Okay, and absolutely liquidity is changing. However, Matt, Liquidity has the potential to come back in the first quarter of next year, but certainly liquidity has. There's a lot of repo stuff, a lot of stuff going on with the Japanese bond market as well that we touched on yesterday and late last week here as well. So just give you a bit of an idea. Now, let's talk a little bit about NVIDIA and why NVIDIA is important. So NVIDIA is something like, I don't know, 8-9% of the S&P, something like that. Someone could probably check that more closely. And so all the algorithms. So if you think about a correlation algorithm, like a machine that basically buys stuff based on what something else does, right? It's not just that NVIDIA is 8% or whatever it is of the S&P. It's that the algorithms will tend to follow what the stock does even more so. So if you are an S&P 500 algorithm, there's a lot of those that basically follow what NVIDIA does to kind of, either try to generate some alpha. So whatever NVIDIA does tomorrow, it likely has, 2 or 3 times the weight on the market than just from a market cap perspective. That's my very simple back of the envelope math, right? So I'm sure someone has done more quantitative analysis on that than I have, but that's what I see. So NVIDIA is a very big deal. It's also a big deal from a sentiment perspective, right? Which kind of explains why, which is really a result of so many people obviously watching the stock. So it kind of has a feedback loop. So that's what's going on there. It's important, right? So from a positioning perspective, right? One way to kind of think about this now is, okay, what am I going to do today as a trader and portfolio manager in my account based on the fact that, again, NVIDIA has earnings coming up? From a trading perspective, what I personally do not want to do is try to make a bet on NVIDIA, because I don't know what the stock is going to do. I know a lot of people think they know what the stock's going to do, and I can tell you, historically speaking, that's a very low probability bet to make a bet here that on what the stock might do after earnings. One can be right about that, but one can just almost exactly equally 50-50 be wrong. So it's not a very good reward to risk bet. So better is to do something once earnings are reported, and then we can kind of see. So to give you a little bit of an idea of where NVIDIA is trading, we'll look at an absolute chart first, and then we'll talk about how we might be able to make sense of this from a trend following perspective, which is ultimately where we take the analysis to sort of a more sophisticated level. So this is just where NVIDIA is trading right now. So we can draw lines here and come up with all sorts of reasons why the stock is either going to drop lower from here or is going to find support and go higher. The reality is we don't know what's going to happen immediately after earnings. What we do know is that the stock, from a trend following perspective, and that's really where, again, we take this analysis to the next level or more sophistication. We do know that NVIDIA, from a trend following perspective, using our trend following model, the market rover, remains in a bullish trend, right? So what that means is that from an investment perspective, I certainly don't want to be short the stock. Maybe I take some profits along the way. We've heard Peter Thiel, we heard obviously SoftBank the week before liquidate their positions in NVIDIA. Now they were sitting on a lot of profits. So it's not this thing we have to sell. It's certainly not a short from an investment perspective, but it's also not something I want to go fully into the earnings report, loading the boat, it being 10-20% of my portfolio. For a lot of people, it's even more than that, right? Now, but again, this is the perspective we need, that the trend following models, so the investment time horizon, the stock is not bearish. That can happen pretty quickly if it drops after earnings pretty sharply and stays down for a couple of weeks, but it's not yet bearish. So to me, it's definitely not a short from an investment perspective, but it's, so that's the trend following model. Now, from a momentum perspective, which is the more short-term models that we use, I'm going to show you what NVIDIA looks like on that. So this is for those of you guys that are using the trend or momentum indicator, you can see where we are right now. So from a momentum perspective, NVIDIA right now has a new bearish momentum. Now, the reason why I'm not really that interested in following this is because that's momentum, and momentum after an earnings report can change like this, right? So I'm much more interested in knowing what's the long-term trend, so I know how to kind of frame the stock. I'm not interested in seeing what the momentum is telling us right now, because after earnings, anything can happen in this stock, right? For most stocks, that's the case, or almost all stocks, right? Now, so that's kind of where we are. If you go back to the absolute chart, just to give you some perspective, the stock is at a level that has memory, right? So we used to find resistance there back in August. Then we ultimately kind of broke above it, and now we're right back. So this gets us to, I think, a really important point about where the market is right now. Before we start building this chart together, and you're going to want to stick around for this, because this is a cool exercise that we're about to do in a minute together. We're going to take 1, 2, 3, 4, 5. It's about 6 or 7 assets. I'm going to combine them on one chart, and you'll see exactly what's going on in the market right now and why this is a critical point in the market. So we're going to do that together, and I think it'll be a good learning exercise, and of course great perspective for you. Before we continue on that, I want to quickly invite everyone here in Set the Market to what's actually usually a members webinar. It's going to take place today at 1 p.m. Eastern, so that's 10 a.m. Pacific. And I'm going to quickly show you what it's actually it's our 10-year anniversary today. Today is our 10-year anniversary of the Vertical X Pro indicator. Okay, and we're holding a member session today, but I do want to invite everyone here in Set the Market as well, kind of as a thank you for being here in the morning. And the reason you want to join is because we're going to go behind the scenes and show people how we can combine, how we can A, find extremely overbought and oversold stocks, and B, combine that with momentum. So let me show you quickly what I mean by that. Okay, I'm going to give you one example, and then we're going to start building a chart together here. We're going to go a little bit longer today, by the way, in case you haven't guessed. But let me just give you one example on this. So for example, let's take for example this stock here, Jeffries. Okay, so I'm just bringing the chart over. So if you are a Vertical X Pro indicator user, you obviously know that what the indicator does is it finds extremely overbought and oversold stocks, right? So that would be this stuff here. Let me annotate it. That would be these signals, right? So for example, Jeffries, the stock, got extremely oversold in early October. So about a month and a week ago, something like that. So 5 weeks. And the point about finding an extremely overbought, oversold situation in the market is that that's usually the worst spot to sell. So for example, Jeffries, according to our Vertical X Pro indicator, was probably the worst. That was probably the worst possible time to sell the stock, when it got extremely oversold. That's the Vertical X Pro. Okay. However, the question is, how do we combine it with momentum? So if you look at that chart on Jeffries, you can see that we have received a momentum buy signal on June the 6th, right? And then the stock rallied as much as 40%. We then received a momentum sell signal. This is the trender momentum indicator on the 2nd of October, so about 5, 6 weeks ago. And then the stock dropped about 22%. But then it got extremely oversold by the Vertical X Pro. So in our 10-year anniversary session at 1 p.m. Eastern, 10 a.m. Pacific this morning, we're going to show you how to combine those. So this reminder, this is actually we only invite our Vertical X Pro members, but because I really enjoy doing these Set the Market sessions, I want to invite everyone here as well. So don't share that link anywhere else. It's just you guys and the Vertical X Pro members. I'm sure some Vertical X Pro members are here as well, but I think that's only fair. So I mean, I've been trading and investing professionally for 25, 26 years. The Vertical X Pro indicator is 10 years old, and I'm looking forward to having all you guys here later on today. So this is an important combination, because a lot of people are aware of our process, right? So basically, what we're doing with our process is the following. So we take our sort of map, which is to say a stock usually goes through this cycle and then the same cycle at the top, right? So you have typically a bearish trend, which is the red background color, and then it goes into an extreme oversold reading, which is there, right? That's the vertical X Pro, and then it goes into momentum, right? So you, after an extreme oversold or overbought reading, there's a good chance that momentum turns up, right? The same thing from when it goes from bearish trend or bearish momentum, at some point it might get oversold. Whether it then goes into a bullish trend is another question. That's where the real money's being made, right? But the rest stuff here. So that's the process. So if you guys want to join that session, it's totally free. It's a member session. We'd love to have you there. Now let's build this chart together so that we can move on. All right. So what I'd like to do is I'm going to take a simple chart and I'm going to take a bunch of assets here that might seemingly look like they have no correlation to one another, but you're going to see immediately why they do. So this is the kind of thing that maybe we could, if we do a special session on, if any of you guys, again, want to have that charting day session, that would be something we would be more than happy to do for you. So first of all, let's look at the equally weighted S&P 500 chart. The equally weighted S&P 500 chart looks like this, okay? So we essentially had a breakout attempt, and then everyone on Twitter and and people all over the place were screaming for a breakout and market broadening and all that stuff, right? And as far as I'm concerned, and I think you can see this too, there is no breakout. In fact, all we've done is potentially put in some sort of a double top, maybe even a head and shoulders pattern. Maybe, right? Maybe. We don't know this yet. Let's take something different. So this is the equally weighted S&P 500. So let's add another chart here. And I'm going to add industrial stocks. Okay, this is the industrial sector XLI. I don't know about you guys, but I think you can see that's probably the same chart, right? Very similar chart. I can annotate it like this, right? I can add this little bow here too, all right? Up here, and there you have it, okay? What about another one? What about software companies? Okay, so that includes something like Oracle. All right, same exact chart. That's this one here. I'm going to try to drag it down a little bit so you guys can see this. I know it's going to get more and more difficult for you guys to see these charts, but because there's more and more added on here. But you know what? Let me do this. Actually, I'm going to add it at the bottom, the next few here, so that you guys can see that they're the same charts. Okay, here too, you can see we had a breakout fake out, and now we have this situation taking place where we have this. Okay, are you guys following so far? Give me a quick yes if you follow. This is really important if you're following so far. This is important, right? So we're taking stuff that seemingly don't have much correlation. We took the equally weighted S&P, we took industrial stocks, we took software companies at the bottom. What about the German DAX? Okay, that's German large cap stocks. Let's see if we can find something there that looks similar. Oh, look at this. That looks very darn similar, right? More or less the same chart there too. What about financial stocks? Okay, that everyone is so bullish on because of who knows what amazing things they're going to do with AI. Okay. What about financial stocks? Well, I don't know about you guys, but to me, that looks more or less the same as well. Okay? So, in fact, I'm going to annotate this a little bit so you guys can see this, right? So if I were to take that bow up here, or that arch, it's an arch, not a bow. Where did I get bow from? Oh, I think it's one arch. Okay? So, all right. So what's going on here? So that's the same thing as well. What about high yield bonds? Okay? Now, we got a crap load of charts on here, but I hope you guys are starting to see what I'm getting to. High yield bonds, okay, very important. So, high yield bonds. I added it up here, didn't I? Yeah, so HYG is up here too. It looks exactly the same. Let me remove it and add it at the bottom. Okay, this is HYG. We'll add it as a new pane. There you go. I don't know about you guys, but that's more or less the same chart as well. Okay, so give me a hell yes, HY. And I can add other stuff too, by the way. I haven't even really scratched the surface. This is one trade. Okay, so next time you hear some guy on YouTube or Twitter or wherever these guys are coming at you from, telling you about some magical unicorn ideas that stocks or Bitcoin's going to go to 200,000 in the next 30 days, just what you need to do is respect the price action and respect the signals, and not listen to some guy or gal, promise you who knows what because they have no clue what they're doing. Most of them, right? That's not because they're bad people, because most of them have no experience. So I would take this chart if I were you. I would take a good, long, hard look at it. Be honest with yourself about what's going on in the markets. And last thing I want to say for today here for Set the Market is, first of all, join us at 1 o'clock today. It's actually a member session. It's our 10-year anniversary member session, Vertical X Pro members. Please join us there. You're not going to regret it. You're going to love it. We're going to talk about how to combine momentum with extreme overbought and oversold. But the second thing I want to tell you, and I've now said this for about a month, by far, it's not even close. By far, the biggest consensus trade that I see right now in the near term is that is there a delay here? Is that we are going to have a year-end rally, right? That's what I see as the consensus trade, which is to say that if it doesn't work, it's going to cause a lot of pain, right? So just kind of keep that in mind, okay? We'll leave it at this. I don't know if there was a delay just now or something reset, but anyway, I hope this was helpful for all of you guys. I'll see all of you in Set the Market that are members. And again, if you want to join us today at 1 p.m. Eastern, 10 o'clock Pacific, in our 10-year anniversary session for Vertical X Pro, where we're going to teach you how to use extreme overbought and oversold readings with momentum. We would love to see you there. Have a great day, and we'll see you soon.